Hello everyone, I'm Jaime Agostino, Vice President, Marketing and Education with Vizo Financial. I'm filling in for Tim Sustek with your FOMC update for the July 2026 meeting. At the July FOMC meeting, the committee maintained the Fed funds target range at 3.5% to 3.75%, and interest on reserve balances was also maintained at 3.65%. The post-meeting statement changed little, simply exchanging the words "is continuing" for the words "reaffirmed" when talking about the Fed's ample reserves regimen. The bigger news is there were 3 dissents at this meeting concerning the rate decision. Regional Fed Presidents Beth M. Hammack, Neil Kashkari, and Lori K. Logan preferred to raise the target range for the Fed funds rate by 1/4 percentage point at this meeting. We'll talk a bit about Chairman Warsh's post-meeting press conference after the break. Welcome back. Chairman Warsh gave his prepared remarks to start the press conference. He said the economy is showing impressive resilience with positive trends and solid growth. He also said though inflation remains above the committee's 2% goal, there should be no thought that there is an acceptable level above 2%. The FOMC is committed to bringing inflation down to the 2% goal. He indicated 2 economic developments since the committee's last meeting were worth highlighting. The first is the Treasury yields are significantly higher across the curve. The chairman explained that this was a result of market reacting to economic information in real time and playing the ball and not the referee, which he believes is a good thing and provides the committee valuable information. He acknowledged the reduction in forward guidance may have been a factor here. The second development worth noting is the strong growth in business investment. Strong capital expenditure in high-tech sectors like AI have helped sustain the healthy momentum of manufacturing output and prepared the ground for future growth. Finally, the chairman said the committee had good discussion and is asking the right questions in this consequential time to make sure they focus on the big things that matter most. In the post-meeting Q&A session, Chairman Warsh again stayed away from offering any forward guidance or giving straight answers concerning why the Fed did not raise rates at this meeting if it is intent on fighting inflation. More than once, he referenced the bond market's rising yields and indicated how beneficial he felt it was for the markets to interpret and react to economic data without Fed interference. When questioned about inflation, he reiterated the committee's intent on reducing inflation to 2%. And though technically the committee uses PCE as the chosen measure for inflation, they would be assessing inflation based on a broad set of measures. He also said that maintaining rates at this meeting should not be looked at as the continuation of a pause because the committee has done rigorous economic analysis and asked the hard questions needed to assess and understand the current situation. As for future press conferences, the chairman indicated he will have them for the remainder of this year as they have already been committed to by the Fed. But it looks like that may change going into 2027. Well, the obvious takeaway from the press conference is that Chairman Warsh is serious about not giving any forward guidance. Many of his answers to questions were vague to say the least. And the message that comes through is that this is a new Fed with a new way of thinking. And it will be a little while before all the ducks are in a row and marching to the new drumbeat. The markets do not seem to be patient, though, with the yield curve steepening a bit after the meeting on top of the already elevated yields mentioned earlier. We'll see how the markets digest this latest dose of new Fed in the coming days. That's the FOMC update for July. Thanks for watching and be well.